Welcome back. We are now hearing that the Federal Reserve may actually cut interest rates in September, and the markets are reacting in a very positive way. In today's video, we're going to be exploring what the Federal Reserve said, what they are going to do, what market participants think they're going to do, and more importantly, where we are in the cycle, especially the Bitcoin and the crypto world. Stocks are already at all-time record highs. Bitcoin is hovering around all-time record highs, as well as many other cryptos. But does this mean we are going much, much higher? Well, let's get into what the Federal Reserve said. Then we're going to get into some of the Bitcoin and Ethereum, signal companies and signals that we can kind of identify where we are going. In my view, we are still at or near the top of we are literally at the top of the market, right? We're at all-time record highs in the stock market, all-time record highs in many cryptocurrencies, not all, but some. And this as the Federal Reserve may be reversing course and cutting interest rates in September. But is cutting interest rates going to push the markets higher? Or are the little jumps that we're seeing in crypto just based on speculation and anticipation? We're going to be discussing that and more. Make sure you guys are subscribed to the channel. We upload every single day of the year to bring you the latest happening in the financial world. Also, give this video a free thumbs up. We're going to be getting into the Kanye West coin as well. That whole debacle is underway as we are entering September of 2025. Thanks for joining the channel if you haven't already subscribed, and also giving the video a free thumbs up. So there was, at the end of August, this thing called Jackson Hole Financial Summit, where basically the economists and central bankers from the US go and kind of discuss what's going on. The big picture is Powell, Federal Reserve Chairman right there. He described a complex mix of forces reshaping the economy, concluding that the baseline outlook and the shifting balance of risks may warrant adjusting the policy stance, suggesting that a rate cut could arrive as soon as the Fed's mid-September meeting. Now, just to keep you guys up to date, we're getting the Federal Reserve in September, and then we're not going to hear again from them until the end of October. And then we'll hear from them, I think, one more time in December. So we get 3 more times this year to hear from the Federal Reserve. Powell also said that Federal Reserve officials will make their rate decisions based solely on the assessment of the data and its implications for the economic outlook and the balance of risks. He said, "We will never deviate from that approach." So here's the deal. First, let's see what Row Rider said. We've been following Row Rider, who's been kind of analyzing the market in a very similar way that we do on this channel. He said the speech was as expected, dry as a bone, right in the center. Higher inflation risks, higher employment risks, policy will be data dependent. That's basically what we just read about what the Federal Reserve said. But the markets, of course, pumped before he said a word, and the pumpers will spin it as dovish. And that is exactly what we're seeing. We're seeing a lot of the sentiment around this speech as very bullish, as like, oh, well, they're going to cut rates. We have a lot of data that is going to be gathered before they even make the decision and before they have their meeting. So we're going to have to really wait on the data. And the data is still trending in the direction that would probably make them not cut rates. And they said at the last meeting, they're probably not going to cut rates. Even if they do, I want to remind my viewers here, because again, you guys are the smartest of the bunch, right? Cutting rates does not pump the markets. Money printing is. And we've even heard from Arthur Hayes most recently at the end of August as well, right before the Jackson Hole meeting with Federal Reserve Chairman Jerome Powell. And Arthur Hayes stated that he kind of doesn't want the Federal Reserve to cut rates because he believes that if the Federal Reserve cuts rates, that's not money printing. That's not going to pump the markets. Remember, the Federal Reserve was cutting rates at the beginning of 2020, and what happened to all the financial markets? They all dropped, and they didn't start pumping until really the middle to end of 2020, when the money was printed and distributed. $4 trillion. So there was a lag effect. So even if they start cutting rates now, that is an indicator that in my view, it's an indicator the economy is not doing that well. And that's bearish. And so my thesis has not really changed based on what happened there. But if we look at what the Treasury is doing, this could indicate money printing. The US Treasury buyback of $4 billion in debt has sparked liquidity debate ahead of Jackson Hole. So the US Treasury completed one of its largest bond buybacks in history, repurchasing $4 billion of government debt this week. So I want you to think about that. The government created the debt, and then they bought the debt. So they're the lender and buyer of last resort. And now it's not even the Federal Reserve alone. It's the Federal Reserve and the Treasury. This is not good for the economy. This is not good for the dollar, and it's not good for markets. But it is an indicator that the markets are starting to kind of break, and there's something else is going to have to occur. And what is that other thing that's going to potentially occur? Well, the Congress is coming back in September, and they're going to be deciding on the budget, on the debt ceiling. And that is money printing. That's what we have to keep our eye on. And there is a potential that Congress is going to push this into next year, right? Early in 2026, because 2026 is midterms. And so if they do money printing now, people are not necessarily going to remember it. But if they do it next year, they will. And so all of this is leading to me believe, regardless of what the Federal Reserve does, even if they reduce rates by 0.25% or even 0.5%, the market is pricing that in. And or the market has already priced it in, right? Everybody in the market has been thinking that the Federal Reserve is going to cut since January, and they haven't. But what happened to the markets? They keep going higher. And so what happens when the Federal Reserve does cut? Could go lower. And we know based on the reverse repo operations, which are on the screen right now, this is the Federal Reserve sucking liquidity out, or excess liquidity out of the system, out of the overnight borrowing and lending markets. And now the reverse repo is almost at zero. So you have very little liquidity getting sucked out of the ecosystem because that means there's not a lot of excess. You have the Treasury buying back its own debt, and people are bullish because the Federal Reserve may cut rates 0.25%. Like that's going to save the economy. It's not. The money printing is what is going to pump the markets. And so in my view, the move that we are seeing in the markets after the Federal Reserve meeting, this is all just volatility. This is all just speculation. And now if we look at Polymarket, Federal Reserve decision in September, there is now an 80% chance that there will be a 25 basis points reduction. And there is a 3.9% chance of a 50 basis point reduction. So they're still showing reduction, but they're not showing a major reduction. I mean, 25 basis points I don't think it's going to move the market that much. Now, they also have Fed decision in September, which is showing basically it just seems unsure of where the market is going to go. Kalshi is showing the same thing for September. Let's refresh this, see if it updated. And it's showing that the market is anticipating a 25 basis point cut. That's really not going to do anything. And if you guys think that like we're going to get to $450,000 Bitcoin based on a 0.25% reduction in the federal funds rate, I mean, guys, pay attention. Now, if they do cut rates, or even if they don't, doesn't really matter. It's all about the money printing. And the money printing comes from Congress passing these budgetary rules or laws. Meanwhile, another top indicator, and if you guys don't believe me that it's a top indicator, what happened at the end of 2024? Top in the market, and what happened during the top of the market? Meme coins. And where did Kanye West decide to drop his Yeezy coin? On Solana, because Solana is a meme coin network. It's not even a financial network anymore. And so, this is another top indicator. So all the noise about, oh no, we're bullish, like all of the bearish sentiment, it's all gone because now the Federal Reserve is going to cut. Guys, that's not how the markets work at all. And so Kanye West dropped this YZY coin and payment ecosystem on Solana. Let's see. I mean, there's really nothing to the coin. It hit $3 billion market cap shortly and then dumped, as most meme coins do immediately, and if not immediately, shortly thereafter. So you can see that when it first launched, it went up to $3. Now we're at 75 cents with a market cap of $225 million, fully diluted 751 million. For a billion total coins, only a third of that is in circulation. obviously this coin isn't going to do anything and it's probably going to continue to lose its value. But that doesn't mean it's not going to go higher in the volatility shifts that we are seeing all over the market. But again, these are the indicators like, nope, our thesis is still valid, right? Like, we don't see this happening in a bear market. It only happens in a bull market. We only see these meme coins launching in bull markets, period. Because that's where the liquidity is. That's how they can extract money out of the market. And so they're extracting money out, and they have been for over a year now. And you're saying, no, buy now, buy now, buy now. Okay, so you're going to be buying directly from Kanye. Makes sense? Not really. But anyway, moving right along, Bitcoin ETFs hit a 5-day losing streak. But Anthony Pompliano says that Bitcoin is oversold. Now, let's understand exactly what Pompliano is saying here, because I have more stuff that we're going to kind of deep dive into in just a minute, involving what Anthony Pompliano's thesis is. So we've seen a lot of outflows throughout the month of August and even July in a lot of the ETFs. But Pompliano on CNBC said that Bitcoin is likely undervalued now. It was trading at $112,000 at the time of writing. So we're at all-time record highs. This is slightly above his company ProCap's dollar cost average of about 108,000. And again, he's the most bullish now. It's the most undervalued now. Well, is it most undervalued because he holds it at a very high dollar cost average price, or does he really believe that it's undervalued and oversold? Well, Pompliano said right now at $112,000, $113,000, it's pretty oversold. He said that Bitcoin's oversold signals, along with Bitcoin's approaching September and October in the year following the April 2024 halving, could indicate the asset's price is ready to move higher. Guys, it has already moved higher. I mean, he's talking about the Bitcoin halving, which occurred in April of 2024, right? This was April, where are we? Right here. This is April of 2024 at the beginning of this chart. We've gone straight up since then. People are going to say, but Cryptoviser, it's not Banana Zone. Well, why does it have to be Banana Zone? Just because it was last cycle? Just because Stock to Flow says it or Raoul Pal says it? No, the markets don't operate that way. And again, the more the market anticipates a move in the market, the less likely that move is actually going to occur. And again, Anthony Pompliano, I keep saying this, he's a very smart guy. I mean, he's a good businessman. I cannot understand how he doesn't understand where we are in the cycle. Like, I cannot get it. He said people are in front of their screens in September. They're not in front of their screens in August. So people are buying and more active. If people believe that the end of Q3 and beginning of Q4 is a good time for Bitcoin, people will start to act in a way. Okay, Anthony. I mean, at the end of the day, again, our dollar cost average in Bitcoin was not $104,000. His publicly traded company, ProCap, that's their dollar cost average. I mean, any reduction in the price below that $110,000 is putting his company at risk of liquidation, at risk of bankruptcy. And it's not just his company, it's many other companies as well. And so Anthony Pompliano had Matt Siegel, who is the head of digital asset research over at VanEck, one of the major financial firms in the United States that is heavily involved in crypto. And he asked him if he believes the 4-year cycle is over. Again, let me just make this very clear to my viewers. The 4-year cycle will never end. It will be different from cycle to cycle, but it will never end because the Bitcoin halving is baked in. And so it's give or take a little bit more than 4 years, but it's around that 4-year cycle. And so we're always going to follow that. Now, again, the dynamics in the market are going to change. We've seen diminishing returns over the course of time and over the last 3 cycles, and we'll probably continue to see that. But that doesn't mean that the 4-year cycle is over. But let's listen to what Anthony Pompliano's guest, head of digital asset research at VanEck, said about the 4-year cycle. Let's listen in. And by the way, don't forget to give this video an absolutely free thumbs up. Also, hit that subscribe button if you're not already a subscriber. That way you can always see our new videos, and just giving the video a thumbs up can help show our videos in your feed a little bit more to make sure that you guys don't miss anything going on in the markets. Anyway, let's listen to Matt Siegel and Anthony Pompliano.
4-year cycle over, or do you think that it will remain?
I lean towards remain, but
Bingo.
in a more muted fashion. So that's kind of wishy-washy answer,
Yeah.
but it's been around for so long. I'm going to give it the benefit of the doubt. Next year we have kind of midterms heating up. It's going to be not much happening in terms of progress in Washington. The rate cuts might be kind of well known and already enacted by then.
Priced
It's
in.
too early to say, but I'm definitely on the lookout for a down year at some point here and cycles resuming. But definitely with the ETFs and now the corporate buying, hopefully there's some more counterbalance to that.
And this is, again, what I've been saying, right? The diminishing returns is not because, Wall Street is eating the profit. Well, I mean, they are doing that as well. But because there's so many more participants in the market, no matter how bullish everybody is, you're going to have now a counterbalance, which is the bearish side, or Wall Street being able to sell from ETFs or these Bitcoin treasury companies or whatever else. And by the way, there's other events like black swan events or other issues with the Federal Reserve, with the Treasury, with this battle between the president and the Fed. This can also cause issues in the markets. And so this idea that we're going to have an extended market, nonsense. You guys hearing from the head of research of Van Eck saying, no, the 4-year cycle is not over. We've heard from other well-known participants in the Bitcoin ecosystem, Saifedean Ammous, just a few months ago, he was interviewing with another Bitcoin maximalist who was like, wait, you don't think that we're going to hit $200,000? What? And he goes, well, we're almost at the 18 months after the Bitcoin halving, which historically is when the top of the market is. And so it's very unlikely that we're going to hit $1 million, $500,000, 200,000 even potentially. And she was like, what? Oh my God, but last cycle, we should be performing better. And it's like, the Bitcoin maximalist cannot even see where we are in the cycle. And therefore, if you can see where we are in the cycle, and by the way, many of my viewers get it. There's a cohort of my viewers that are like, no, Cryptoviser, you're just fudding. We're not going into a bear market, whatever. Those people literally cannot see the cycle and think that the cycle is over. And at the end of the day, they're going to lose and we're not going to lose, right? In the markets, we're just not going to lose because we know the 4-year cycle is going to continue in its cycle. And therefore, we are going to have a bear market. But, there's a lot of people who think that we're not going to. Meanwhile, Bitcoin whale has woken up after 7 years and rotated their holdings into $270 million worth of Ethereum. And so again, everybody keeps saying, oh, well, people keep buying Bitcoin. It's like, yeah, but they're buying. That means somebody's selling. Who is selling? Whales. The whales are offloading and they're taking the cash. Meanwhile, you're saying, no, never sell, never sell. I'm never taking profit because the price is going to continue to go up through the course of time. And it's like, okay, then do that. But then what's the point of holding the asset in the first place if you're never going to realize any gain? Well, a wallet that's been dormant for 7 years became active, selling a bulk of its Bitcoin while increasing its stake in Ethereum, according to blockchain firm Look On Chain. The whale wallet initially received 100,000 Bitcoin 7 years ago, recently rotated into 62,000 Ethereum, worth $270 million, while establishing a 135,000 Ethereum derivative long position. They said, we just spotted another Bitcoin OG depositing Bitcoin into Hyperliquid to sell and buy Ethereum. On-chain tracking shows this OG received 85 or 86,000 Bitcoin 7 years ago, matching the trading pattern of the OG we reported recently. And so again, there's more and more Bitcoin being unlocked. The whales are selling. Once the whales stop selling, which they're not going to, right? Because they are going to take the money. Most people in crypto are dealing with, thousands or tens or hundreds of thousands of dollars. Most are not dealing with hundreds of millions of dollars or even tens of millions of dollars. And the whales are. And so to the whales, they acquire this Bitcoin for practically nothing. And then now they have $270 million worth or whatever it is. Why would they not sell? Why would they not sell, especially if they understand how the cycles work, and if they've been in the market for 7 years, they do know how the cycles actually operate because they've been through it. Meanwhile, we're also hearing JP Morgan outlining 4 factors behind Ethereum's outperformance over Bitcoin. Well, one, I think, is what we just showed you, that Bitcoin whales are rotating into Ethereum, which we have been predicting for months now on this channel. But now JP Morgan is giving their analysis, their analysts pointing to a combination of exchange traded fund inflows, corporate treasury adoption, regulatory clarity, and structural ETF improvements as the main drivers of Ethereum outpacing Bitcoin. I mean, this is true, right? Ethereum didn't have regulatory clarity. Bitcoin did in the previous administration, even under Gary Gensler. Gary said Bitcoin is not a security, but he wouldn't answer whether Ethereum was. Now we have clarity and it's not, and the regulatory agencies are moving on from it. And what else? The Bitcoin treasury the Ethereum treasury companies are buying and buying and buying and buying. But that begs the question, are Bitcoin treasury companies and therefore Ethereum treasury companies still a smart investment in 2025? Well, it depends what your thesis is, right? There's a lot of people that they're just going to buy no matter what. And there's nothing wrong with that. We are looking at trading on this channel. We're looking at leveling up, right? We want to level up our portfolio. And leveling up your portfolio, you can either trade the market or just set it and forget it, right? Just buy and dollar cost average. And if you need money, you pull some money out and you forget about the rest, right? But there's a lot of people who there's more like nuance, there's more detail, there's more to it of whether these Bitcoin treasury or Ethereum treasury companies are it. My general take is that there is no reason really to buy these Bitcoin treasury companies at this point when you could just buy the Bitcoin, or you could just buy a Bitcoin ETF. There's significantly less risk. You're not putting your investment into one person's hand. And if you look at MicroStrategy, effectively you're just putting it in one person's hand, right? The other thing to keep in mind is that there's counter traders. Okay, there's people that are trading the market even if you're not. And so when you're looking at downside risk, is there higher downside risk with MicroStrategy, which clearly has a very high MNAV, or with just buying the actual crypto or the ETF where the MNAV is 1, where it should be? Well, that's a good question, but it also leads us into the other questions: is what else about these stocks is lucrative or is better than holding the actual asset itself? A lot of people who are in MicroStrategy trade don't get it. They don't get it. I mean, look at these sales. These are insiders, executives, or board members of MicroStrategy, and they have been selling. Andrew King, the chief financial officer, August 7th, he sold 18,000 shares at $390. You want to do the math on that? Let's do the math on that. $390 times 18,750. It's $7.3 million. Day before that, 6,000 shares. A few days before that, bought. But they're selling. They're selling more than they're buying. And so is this bullish? I mean, if you look at the last 12 months, the insiders sold more, 250,000 shares. They've sold more than they purchased. That's their net. Now, over the last 3 months, you see more purchases than exits, but some of this can also be stock options that they have for compensation and stuff like that. But there's a lot of insider selling going on, and that is a risk. The other risk is this MNAV. It's a puff of air under the stock price. But a lot of people are saying, Cryptoviser, you're just fudding. These Bitcoin treasury companies, Ethereum treasury companies are great. Well, like I said, there's counter traders like Kathy Woods, ARK Invest. Just the other day, sold $50 million worth of Bitmine Immersion Technology shares, unloading 832,000 shares, according to their filing. And then just a few days after that, they continue to unload, and they've reduced their position 23% in a week by 1.8 million shares, a reduction. So listen, Kathy Woods ETFs, they do trade the market, right? They're not buy and hodl forever. They trade the market. But what is Kathy Woods seeing that she's exiting these positions? Well, a lot of it comes down to how they're going to be acquiring the Ethereum or the Bitcoin. And a lot of it is through stock dilution or creation of new shares and creation of debt instruments. And in my view, you could be bullish on Ethereum, but not necessarily bullish on these Ethereum treasury companies. So a few weeks before these sales occurred with Kathy Wood's ARK Invest. Kathy Wood talked to CoinDesk and gave her thoughts on Ethereum and buying these Ethereum treasury companies. And I think it's really important that we understand her bullishness, but then also see the selling of those same stocks. And by the way, selling doesn't necessarily mean bearish. It just means securing profits, right? She still holds, ARK Invest still holds a large quantity of these Ethereum treasury companies, as you can see on the screenshot right here. She still owns Bitmine Immersion Technologies, just reduced the shares across the ETFs by 1.8 million shares. So let's listen to what she says about Ethereum and these Ethereum treasury companies. We're going to be playing it at 1.5 speed. So if you're already watching this fast, it's about to get faster. Let's listen to Kathy Wood.
I know you've made, well, ARK has made a bet on Tom Lee's Bitmine, of course, amassing one of the largest ETH treasuries right now. I mean, unpack that a little bit more for me. Is that related to what you were just telling me about agentic AI and smart contracts? Do you see Ethereum as being the foundational layer to enabling a productive agentic AI world?
Yes, we have been watching carefully who is signing on to what protocol as they begin to develop their digital asset strategies. So, well, first we saw Coinbase, for its layer 2 base, chose Ethereum. More recently, we saw Robinhood, for the layer 2 that it is evolving,
Arbitrum,
also building on top of Ethereum. We had a thesis that Ethereum was going to be the institutional protocol. I know that Solana was doing much better. Solana had a massive run relative to Ether.
Price-wise.
And so many people were challenging that notion, and yet we're seeing the votes being placed. And it makes sense. Ethereum, while it might be higher cost and a little slower, it's more decentralized and therefore more secure. Solana, we think, is probably going to be the winner in more consumer-facing applications. And it was very, very difficult for us to gain a position in our ETFs with good exposure to Ether. There are all kinds of problems when 40 Act funds buy another fund, another ETF to gain exposure. There are tax issues. There are fee issues, fees upon fee issues. There's something called, and this is a tax issue, bad income. If the profits associated with something generating bad income, bad doesn't mean evil at all. It just means it's a tax term. If those profits, gross profits, this is gross, there's no netting here. If those gross profits are more than 10% of the total profits generated in a year of a fund, the entire fund can be shut down. The tax benefit, you'll basically, you'll lose a lot of tax benefits, and you'll be subjecting the fund to a great number of fines, if not actual shutting down. So we can't take those risks. And as you can tell, I'm not deep into tax law, and I'm not going to be able to explain exactly who, what, when, where, why, and how. I just listen to our trading team, our compliance team, our finance team, and I say, okay, I can't go there. It's just, I can't do it. So this is the first time we've been able to gain a solid position in Ether. And, sure, it comes at a premium, but what's different from Bitcoin treasuries, like MicroStrategy, now Strategy, is there's just more utility that these Ether treasuries can offer. Staking being one of the most important ones.
Bingo.
The ETFs, at least
Bingo.
not yet, do not. The Ether ETFs are not allowed to stake.
Correct.
So, and yes, I think
So what you can hear from Kathy Wood is the reasoning behind why they do things. Some things they do just because of legal and tax compliance purposes. And so they weren't able to get exposure to Ethereum, but now they are. And in my view, based on following Kathy Wood's ARK Invest portfolios, and as you hear, like, she's not just one person making decisions, right? This is a whole team that is giving insights and analysis. Like, what I do is I'm just a one-person team for my portfolio. You are probably a one-person team for your portfolio, but you're taking in research from all these different places. Now, ARK Invest, they hire people to do this. So people are traders, people are watching the markets, they're looking at the sentiment, they're looking at the legal, they're looking at the tax implications, they're looking at risk and compliance. And so even though 4 teams may say, yeah, this is a buy, one team may say, no, we can't do it because of the risk to our shareholders, can't do it. In your own portfolio, you can go in and out whenever you want. But what's interesting is, regardless of what the ETFs are doing, there's a lot of people, probably some of you who are watching the videos, that will just buy and hodl, 10x, hodl, not selling one. And it's like, you're not even going to sell some of it? You're not even going to take profits on any of it? That is risk management, right? And it's not just risk for the downside, it's also risk to the upside. How much more upside do we actually have? And so you heard Kathy talking about the premium to the NAV with these Ethereum treasury companies, but there's really only a few right now. With the Bitcoin ones, there's not. There's a lot more, and the risk here with the Bitcoin treasury companies is, again, there's no utility. You can't stake. There's no cash flow. And that's a problem, right? In the future, I think like companies like MicroStrategy, they're going to put their Bitcoin to work through lending, through financing other things, to taking out loans to buy more property or buy Bitcoin miners or buy AI data centers or whatever they're going to do. They're going to eventually be able to take loans out with their Bitcoin as collateral. And the loans that they would take would be relatively low risk loans with high cash flow, like buying companies or buying facilities that do cash flow, that the risk of losing that company is very, very low. That's probably what they're going to do, but we're not there yet. And we're not seeing any of these Bitcoin treasury companies do anything with their Bitcoin. And that's a problem because you have the other companies like SharpLink, Bitmine Emergent Technologies that can stake. And right there, they're going to be earning anywhere from 3 to 7%. Even if they just give 2% back to their shareholders, that's better than you're getting in other assets. And a lot of people would look at that and say, well, I'm going to get 2% back, but I'm also going to have the price appreciation of the actual crypto. That could be good as well. Now, SharpLink has risen as the Ethereum treasury firm has authorized $1.5 billion in stock buybacks. So they're doing very similar things to what Bitmine Emergent Technologies has done. But what's interesting here is that they're approving buybacks, but they're also approving sales of the stock, ATM. Let's read a little bit more into this. SharpLink, or SBET, on the stock market said that their board approved a stock repurchase program or buyback of up to $1.5 billion. The co-CEO, formerly from BlackRock, said the authorization is part of a disciplined capital market strategy, noting that issuing new equity while the share price lags NAV would dilute the Ether per share metric, whereas buybacks could be accretive in those conditions. NAV, we know, represents the per share ETH math. Basically, if you have one share of SBET, how much Ethereum is underlying in that, right? So the Ethereum per share. That's calculated by taking the fair market value of the company's Ether holdings plus cash and other assets minus liabilities and debt and dividing by shares outstanding. Because SharpLink is an Ethereum denominated treasury play, its NAV moves with the crypto's price and changes that the company adds or sells tokens. And so they're approving stock buybacks, but they've also approved share issuance, right? Because how do they raise money? But I think that they're doing this buyback so that if the price goes below the NAV, they can buy some of the shares back to push the price back up. Because selling shares would push the price down. So it's basically just being able to play both sides, right? They're selling shares on the open market to then go buy Ethereum. And then if the price goes below the NAV, they can buy stock back to basically arbitrage their own stock. This is something very new that we haven't really seen occurring in markets where they're playing both sides, besides with these Bitcoin and Ethereum treasury plays. And so we've been talking about MicroStrategy a lot, but where do I stand with MicroStrategy? My thesis has not changed. We are going to continue to see volatility. Even Michael Saylor has been tweeting out volatility is a gift, and it is, right? But volatility is a gift, not necessarily in the way that you think. It's a gift because this is the market to trade when the markets are volatile. It doesn't change the macro thesis because, again, when you're at the top of the market and rotating into the bottom of the market, you have major swings. So you see when you're at the top of the market, you usually pull back fairly substantially, 40, 50%, which we haven't seen that just yet. Then it pumps again. And the bulls say, you see, that was just a little dip to buy. But the bears, typically, when they're looking at the zoomed out picture of this chart, they could say, this little dip is not the dip. The bulls, every dip, they're going to say, that's the last dip. That's it. It was over. We were able to buy it back. We're going higher. But what we're seeing is less and less being bought, less and less being able to be debt being able to be acquired. And there's a puff of air under the MicroStrategy stock. And so even if the price of Bitcoin goes up, MicroStrategy can effectively stay the same and just compress the MNAV. And then when Bitcoin does drop, that price goes down precipitously as well. So there's a lot of dynamics at play here. I can't tell you exactly what's happening in the market in the future, or exactly what the Federal Reserve is going to do, or how it's going to impact the markets. All I can say is that my thesis has not changed. Maybe we're going much higher in the markets, but that's in the short term. I believe by this time next year, by the middle of 2026, we are going to be down here in pretty much a lot of markets. I think definitely crypto, even Ethereum, right? Because these are the macro conditions in the market. There's a lot of bullish sentiment. There's a lot of buying. There's a lot of integrations. There's a lot of clarity that we're getting from a regulatory perspective and integration into companies and businesses and all of this. But that doesn't mean that we're not going to follow the cycle. That doesn't mean that we're not over leveraged. MicroStrategy is the most over leveraged crypto play in crypto right now, potentially bigger than FTX. Because remember, FTX was about $20 billion to $30 billion in customer funds, right? MicroStrategy's market cap is $110 billion. So we're talking about 4 times larger, and I'm talking about the risk, than what FTX was. And all of it is based on debt. This is not like they were making money from their software business and just buying Bitcoin. They're borrowing money for the Bitcoin. And all of these debt products, Stride, Strike, Stretch, and Strife, all of these take precedent over the MicroStrategy share. So if Bitcoin falls, MicroStrategy is falling much more, because MicroStrategy, you don't actually own the Bitcoin. All these other debt facilities are going to get that Bitcoin first in the event of a liquidation or bankruptcy. You, as a MicroStrategy shareholder, you're last in line. But people will say, but Cryptoviser, BlackRock is buying it. It's like, yeah, but BlackRock has money they can afford to lose. You don't. They're dealing with trillions of dollars. You aren't. And so comparing what BlackRock is doing to what you're doing, you can go ahead and do that, but it's not the same at all. And I just don't see how the MicroStrategy bulls don't see this. And by the way, this is going to rotate into BitMine Immersion Technologies and SharpLink and all these Ethereum treasury companies as well, especially watching the macro market. We can go much higher in the short term, but guys, they're extracting liquidity at very, very rapid paces. Even Congress is doing this, right? Treasury Secretary Scott Bessent said, I'm pushing for a ban on single stock trading in Congress. And they're pushing this. Now, whether this is actually going to pass or not, that's a whole different story, but they are looking to pull profits, right? We've seen it over and over. Congress will buy in, the price will go up, and then they'll sell. And there's a large cohort of crypto that are like, I'm never selling my crypto ever, ever, ever. And it's like, okay, so then go buy Yeezy Coin, and then it drops by 70% in a day, and then you're not going to buy it. Like, that makes sense, right? But why are people doing this? We are at the top of the market. We're at 18 months after the Bitcoin halving, and I've been warning about this for months now. And there's still people who say, but Cryptoviser, the cycle is over. The 4-year cycle is done. We're not going to have that anymore. We're going to have an extended cycle. We're going to go up forever. But you can't when you have value extraction to this degree. And this is just the beginning, right? What do we see in 2024? Celebrity coin after celebrity coin after celebrity coin after celebrity coin, all built on Solana for meme coins. And then they just sucked all the liquidity out and left you high and dry. And the same thing is going to happen, maybe to a lesser degree, in crypto. But the higher we go, the closer we are. And the further we go, the closer we are to a bear market. Are we in it? I don't know. Is the Federal Reserve going to cut? I don't know. And anybody who's telling you that they know the Federal Reserve will cut 100%, we haven't even seen the data in September yet. And again, even if the Federal Reserve cuts the interest rates are not what push the markets higher. Money printing is. So we have to see where the money printing goes. And if the Congress is going to pass something this year, or they're going to push it into next year. If they push it into next year, look out below. I'll see you guys on the next video. Invest responsibly. Do your own research. Subscribe to the channel. Give the video a thumbs up. And crypto on.